May profits be upon you. How you doing? What's up? We're going to take a look at Euro Aussie. Euro Aussie. Now, why am I looking at Euro Aussie? Let's take a look at the RT money meter. All right, we're going to look at this RT money meter, right? And this tracks the rate of change over 15 weeks. The rate of change in a currency over 15 weeks. All right, look at the euro. The euro I have at minus 481, right? Number 7, right? Last week it was minus 390. Aha, it's gotten weaker. It has gotten weaker. Still in 7th place, which is near the bottom, near the weakest, right? Now let's look at Aussie. Aussie is at 199, very close to the 2 that I like to see. I like to see 2 and better, and minus 2 or worse for them to, where I want to take those as putting a weaker against a stronger or stronger against a weaker, right? If you check last week, we had it at plus 327. Now it's at plus 2, right? Or 199. Yeah, it's not trending up. It's trending down, but still very strong, especially against a weakening euro. So I think there is some good probability here, some high probability. All right. Now let's look at what's important here. We're looking at the daily, right? What's important? Breaks of structures, right? The macro view, we have this impulse low, a bearish impulse down. We have a lower high. We did not take out this low until we got here. Respecting the highs, right? And cracking the lows. You know, price is bearish. The market is bearish here, all right? And look at all that momentum coming down. I mean, there's no mistaking the bearishness. Now, let's take a look. Why did it stop here? The key is over here, right? Where are we going? Where are we headed? Well, if we look closely, we can see that we are at the top of a demand zone, right? Well formed, all right, and it has not been mitigated yet, okay, until the most recent time. All right, the current price is sitting right at the top now, mitigating this bearish order block. I mean, this bullish order block here, okay? The deal is, what I think is, price will probably penetrate further because of the bearish momentum, because of the bearish bias of the higher time frame. I believe price will come down further, and we could refine this order block to here, all right, where we see an imbalance that needs to be filled. So that is incentive for price to come down further. All right, we're here now, but I believe here is where price will want to go. Let's go on over to the right. All right, and we can see price sitting on top of this order block, reacted well to it. All right, but did it make a new high? No, it didn't. If it doesn't make a new high, then it still could. It could still, find its way up. But if it doesn't make a new high, if this is the highest it gets, this is a weak low. What does that mean? That means it becomes liquidity for price to come and get on the way to a zone of demand. I repeat these things all the time in my videos because smart money concepts, you don't have to be smart to understand the concepts, okay? Right? It's just, price is weakening, all right? You want to take advantage of that trend down, that momentum. There's going to be a pullback after a break of structure. Look, after this break of this low, what did price do? It pulled back. All right. After the break of this low, what did it do? It pulled back. All right. It's that simple. Why is it pulling back? Because it's grabbing liquidity. Sorry. It's grabbing liquidity here. It's grabbing liquidity here. It's going to grab liquidity here. When it breaks that, it's not just going to keep going. You understand? All right, and we're going into a mitigate. Why does it do that? We're getting ready to go into a mitigation of a zone of demand, a higher time frame zone of demand. You're going to expect some kind of reaction here, a pullback of sorts. All right, now we can get rid of this. All right, just keep this in mind. This is the 50%, right around the 50% of this zone of demand. Got it? But we don't need to keep it on the chart because it'll literally drive me crazy. All right, so we're going to the 4 hour, right? Boom. On the 4 hour, we're going to see this price action. All right, we are bearish on the daily. Bear that in mind. All right, I'm really bearish here. Why? Because we broke structure to the downside. Boom. What do you expect after a break of structure? That's right, a pullback, a return to impulse. And that's what we did, right? And what do? Come up here, reacted to this zone of supply. Price reacted. Doing what? Breaking structure. I love this. I love this because it plays out the same way. We're looking for the same things. It's very simple once you get a grip on the basic concepts, right? So what I want you to notice here is this. Highlight, all right? This is our low. It's climbing, makes a higher high. Up, well, not a higher high, just a high. Pull back, a swing low, a pullback low here. Now we made a higher high, right? So I marked it here, that yellow line. And as it breaks that high, I'm marking the very low, the higher low, right? If price breaks that, breaks the structure, breaks that, then I know price is changing character. It's going from bullish momentum, making higher high, higher low, higher high. That's not a higher low. It's a lower low. Okay, and that means it's switching from bullish momentum to bearish momentum. All right, and what do I expect after a break of structure? When it comes to changing character, all I need is a wick low, a wick below that low. All right, if I'm looking for a break of structure, a confirmation that price is turning bearish, then I want to see a close. I want to see a convincing close so I know for sure. Right now, I don't know for sure. I know that it's a lower low technically. All right, there was a grab of liquidity here. All right, and price went up. All right, but I'll know if it respects this high, and that's exactly what it did. Okay, take a closer look too. I want you to see this. Price came after a break of structure. What do you expect? A return to impulse. It came to the impulsing order block right here and did what? Formed a bearish engulfer, all right, and broke this little swing low, this substructure low, all right? This by itself is another change of character. And when price breaks that low, it's just like it broke this low, all right? There's two of them. This is confirmation for me. And when price comes down and then returns to impulse here, all right, this being the whole order block, right? You could actually go from to the candle wick to the candle top, the candle bottom wick to the candle top wick, right? But I could refine. You can refine it up to the open of this this bullish candle. Okay. Well, the close of it. Or yeah, this was the open. What am I talking about? All right. So so there was an imbalance given here. All right. It came down, returned to impulse. What do I think? There's a higher probability that price comes down after it showed nothing but bearish order flow from up higher. All right. Do I think it's higher probability that it'll come down. Take that low out, take this low out, take out the sell side liquidity. Yes, I do, as opposed to continuing up and taking out these highs. Yeah, I think it's a high probability that we take a trade that is pro trend. Okay, this was a nice pullback, a nice correction to this impulse, and all I needed to do was to come up at least 50%, at least 50%, and that's what it did. Came up into premium prices. I always look for it to come 62%. All right, and it very well could. It very well could, and come up and mitigate this zone if it would get that high. If it would get that high, what am I doing here? Why isn't that leaving a box for me? All right, here. It could. It very well could. All right. You could take this whole zone. All right, and we have what do you call an inducement here to get people to take shorts early and then come back and take their stop loss. It could happen here. All right, in between, because there is a little bit of a gap to fill, a tiny bit of a fair value gap to fill, and we could mitigate this spot, mitigate this this zone. However, I think the high probability is right in front of us. Left shoulder, head, right shoulder. And we're coming off that right shoulder here. So that's where I'm going with this. Am I prepared if price wants to come up here, take out all of this? Because on the open, because we're following bank holidays, both Friday and Monday, there's going to be some bank holidays too, some closing. All right, but not all of them, like Friday. So price could open a little wonky. It could come up, wake up, take out this buy side liquidity and come down. Just be prepared for that. That's all. We want to react to what price gives us and not predict. All right. Right now, I like this configuration. I like this reaction here. It could come up for a higher reaction deeper into this zone of supply and then come down. And that's where I'm at right now. That's my first impression. All right. We've already come into a premium price. All right. We've respected that high by not making a new high. And because we didn't make a new high here, with this low, it becomes weak, right? It didn't make a new high. So I'm looking for the price to come on down. It's a very interesting reaction, right? Very interesting, because this is not a strong low. Yet price came up, came back down into this zone, doing a lot of crisscrossing, right? Came back up and tested this demand zone, gave such a high reaction, but I believe this will flip. That's my gut feeling. So I'm looking for this. All right. And we'll see how it goes. Your first target should be these lows here. If you take shorts here. All right. If price comes up a little further, just wait till it gets up in here. All right. But I'm planning on this one here first. That's what I'm doing. All right. Plan on this one second. If it gets past this high, all right, this is my invalidation point for any one of these 1, 2, or 3 POIs. All right. This one is my invalidation point. Okay. So I hope you enjoyed this this video analysis. If you did, smash that like button for your boy. All right. And do subscribe to make sure you catch the updates. I like to update my trades, my setups, my ideas. Check the community tab every chance you get YouTube on my YouTube channel. and look for updates in the free Telegram. Right now, Lions Den FX is free to join for the duration of April. For the duration of April, we got about 2 weeks left. Join free and get the benefits of full membership. All right. Signals from Drunken Boogie and trade ideas and setups from me, and sharing of the other members, the other Lions that are experienced traders, and they share their ideas and whatnot. Come join us. Love to have you. All right. I will see you in the next video, and be careful trading next week, especially during the open. It might be Sunday, Monday might be kind of wonky.